Hello, good afternoon, and welcome to Leveling Up with HYCM. This is an exclusive free weekly workshop with myself, Giles Cochran, a currency analyst. Well done. Thank you for joining us here
10
today.
seconds.
And I'm looking forward very much to what we have ahead. If you hear a little announcement in the background, it's because I've got my squawk on. So if you hear an announcement that's going on, I'll explain that to you.
German numbers.
That's the squawk that you can hear there. I'll be explaining that to you as we go through. Well, good afternoon. If you could just let me know if you can hear me okay, that would be great. If you could just type in the chat or in the questions, just let me know that I'm coming through okay. Can you hear me all right? Oh, that's great, Rami. Thank you very much. That is super. Just waiting for folks to arrive. Yeah, hi, Elwin. Hi, Greg. Hey, Nada. Hey, Rami. Hey, Simon, William, Shape. Yeah, that's great. That's good to have you on board, and I'm looking forward to what we have today. We have a whole hour together, and I'm just going to run us through in a moment what's coming up for this section. Yeah, hi Nada, good to have you on board. Well, let's get going, and I'll explain how these workshops are going to run. Before I do, there's very important that I just flick up this disclaimer for you, particularly with this workshop. The aim of this workshop is to teach you how to trade for yourself, how to make your own decisions, how you should be looking at the market, the kind of factors that you should be considering. So this is an educational workshop. It isn't trading advice, especially as we will be looking at some specific trade examples. This isn't to be construed as advice. It's an educational process to help you see the way that we look and we work, that I personally work through the market on a day-to-day basis. So with that being said, we will go into an outline of what we have coming up. Now, the aim of this time, as I've said, is to get you guys to practice. You know, it's all very well developing a knowledge and an interest in the foreign exchange markets, but for many of us, that interest is quite a lonely pursuit. It may be conducted through personal research, maybe reading different forums, following different people, but you can't really replace that one-to-one kind of coaching that you get alongside someone. And the idea of this workshop is to get that bit closer. The clue, as it were, is in the title, level up. So that's the idea. It's just trying to help you practice some of the skills you've been learning or reading about. And I want to really put in good foundations for you to really give you the best chance of success. So you're going to find this very useful and very helpful, because I'm going to be putting in some principles and some things you wouldn't have thought of, but are actually going to be really important to your success or otherwise as a trader. So the other thing I want to mention about is this one-to-one coaching. Now, there's a really good kind of feature of this workshop. And what it is we have a raffle. And everyone who attends the workshop will get entered into a raffle at the end of the month. Obviously, it won't be this month because we've just started, but at the end of next month, everyone who attends a workshop will have the opportunity to win a one-on-one session with myself, and I'll be able to tailor exactly what you need and really try to lift you up and give you a leg up on the trading ladder. So that's a real good feature. And for you guys who are attending today, because you have to attend the session live. So it's not, you can't listen to it recorded. So you guys who are listening to the recording live today, you know, well done. That's what you have to do in order to qualify for the raffle. And the raffle will be a one-on-one coaching. That will be an hour with myself, and I'll be able to really, you know, help you individually as to what you require and what you need. And the other thing to mention is that this whole series will be run each Tuesday going forward at this time. So as we're looking through and as we're covering different topics, there may be something that you really want covered. So if you really want something covered, just pop it down in the chat, in the questions, or you can email your suggestions to workshop@hycm.com. Okay, so that's giving you that option there. So if you think about something after the webinar's finished, you can come back. These webinars will be recorded, and you can look at that that email, and you can email your suggestions there. Obviously, the idea of this workshop is that it needs to be useful for you. So please don't be shy. Elwin, thank you. Technical analysis via MetaTrader 4. Right, Elwin, that is a good, yeah, how to perform technical analysis with the MetaTrader 4. Well, we'll be covering some of that. We'll touch on a little bit of that today, Elwin. And also, I can just tell you now that when you look at Elwin, if you can see the screen, if you look at the education on HYCM's website, if you go to webinars, let's just see this. If you go to this support and resistance, drawing the correct levels and how to view them properly, there's a lot of technical analysis via MetaTrader 4 there, Elwin. That webinar will be quite useful to you. But if there's anything else specifically, we'll cover some technical analysis today. And obviously, Elwin, if you've got any more questions, just fire them away. But I just wanted to quickly show you that there, because that is a helpful resource that I've already done for HYCM, and that will no doubt help you. So make sure, Elwin, you check that out at some stage. Is that okay? But that one will definitely be helpful for you. Yeah, okay, great. Now, moving on to the next session. The first aspect that we're going to do is, if you notice on your dashboard, there should be a handout section. And in that handout section, there you should see a workshop guide. Can you just check that for me? And if someone can find it, can you just say, yes, I've found that workshop guide? It's on the right-hand side on your GoToWebinar control panel. There should be a section saying handouts, and you're going to need to open that. That is going to be a structure that's simple, but yet in-depth enough to be useful, and a structure that you can follow on a daily basis. So if you've can you let me know if you found the handout? I'm going to put it in again, just in case it didn't appear the first time. So let's just check. Yeah, so there should be two handouts there now. Could someone just type in the questions and let me know that that's arrived okay? Have you managed to open up the workshop guide? Well, I'm going to assume that no news is good news, but if you haven't been able to get the workshop guide, do just message me. But when you open it up, what you will see, the content will be like this. And what it will say, looking back, looking forward, look at the charts, look at your risk, look at the outcome of your trade. And these are essentially 5 subtitles for the whole trading process. One of the key things for you to understand in trading is, some people think, well,
Equity news over the call reiterating it may dismiss the 5.4 billion euro suit against Porsche.
Yeah, just got the squawk on. I'll explain why I've got that squawk on. It's a very useful tool for trading, and particularly we're looking out for Brexit headlines, as I've shared with the FX week ahead. One of the key things to understand is that some people think, well, if I just rely on technical analysis, that will be enough to trade successfully. Or if I just use fundamental analysis, that will be enough to trade successfully. When the reality is professional traders use both. They use the fundamental analysis to understand the current market sentiment and the current pressures on certain currencies. And then they use the technical analysis to identify key places where to enter trades. So what we're looking at doing is we're looking at marrying those twin concepts together. That is the way to educate yourself in order to give you a good chance to trade successfully. You need to understand the technical analysis and the fundamental analysis of trading. And this handout will remind you of these concepts. So it's looking back, looking forward, looking at the charts, looking at your risk, looking at the outcome of your trade. So these are some of the key pillars of successful trading: fundamental analysis, technical analysis, and risk management, as well as trading psychology. So this is some of the ways I've tried to simplify the whole concept for you. Well, the first thing to do is to look back. Now, when you start and you come to your desk, you never want to just flick on your charts and start trading, because you're literally trading blind. Instead, what you want to do, you want to identify what is the recent sentiment that's been going on in the market in the last couple of sessions since you've been away. Now, the foreign exchange market is traded across three major sessions. You have the Asian session, the London session, and you have the New York session. They're the three, key times that the foreign exchange trades. So here we are now coming into the market at the start of the US session. So
heads up as well, just scrap that.
What we need to do here is we need to see what's happened in the last two sessions. So let's go back to the Asian session, which happened last night, and a little bit at the end of the US session. Now, there were some quite big equity moves at the end of the US session. And essentially what had happened is Donald Trump had come out and he said that if his meetings with the Chinese leader didn't go very well with President Xi, he said he would be putting tariffs on the full 500 billion of Chinese imports.
The Kirkuk oil exports to Iran on sanctions, according to a Kirkuk government official.
And when he said, in fact, I'm just going to turn the squawk off and I'll explain to you why I'm using it later, but it's just a bit too distracting to have on right now, so I'll just turn that off. Okay, so President Trump, he said that there's going to be potential these $500 billion taxes on these tariffs on all Chinese imports into China. That is the sum extent of Chinese imports. It's $500 billion worth. And when that happened, the Standard & Poor's 500, the US equity markets plunged very quickly. And the market very quickly went into a risk-off situation. The yen started to appreciate a little bit, and the market was just on the turn. And then all of a sudden, Trump saw that this drop was happening. He's responded by his Twitter feed, and said, "No, I'm expecting we're going to have a really good deal with China." And so all the sentiment turned around very quickly. So in the Asian session, it was a turnaround in the sentiment. So the end of the US session, it was going to a risk-off situation. Overnight, the Asian equities recovered well. So we'll have I can show you here, the Nikkei closed up 1.45% overnight. And so that was entering into a kind of a risk-on situation overnight. Now, the last session, what's happened, I'll just show you what's happened. The London came into the new session, and London was trying to digest what's been happening, and London started on a risk-on sentiment, but we had some key data coming out, and that was the Eurozone GDP. And what happened is this morning, the third quarter GDP came out for the Eurozone, and it came out at 0.2% versus 0.4% that was expected. Okay, now that was a weak reading, and it's approaching the lows of 2014 for the Eurozone. So this is the weakest growth in 4 years. And if you remember the Eurozone's mandate, they're wanting to normalize their policy as soon as possible. So they're ending their quantitative easing process, which is when the bank prints money. They're saying that that's coming to an end. That easy money policy is now coming to an end in December. And we're going to be raising interest rates in the summer of 2019. Now, this slowdown in growth begins to raise questions. Will the ECB carry on with that policy? Are they staying on autopilot, as Draghi was kind of indicating last week? Now, the slowdown in growth begins to think, well, Draghi had given an explanation before saying, okay, the Q2 reading was, you know, it was just a one-off. I think it was the Q1, Q2 with the bad weather that there was across Europe. That's a one-off situation. Yeah, we've had a little bit of loss of momentum, but we're not having a downturn. Whereas today's data begins to think, well, okay, it's not as good. This isn't necessarily just a loss of momentum. This is starting to threaten to become a downturn. So that's the kind of pressure that's going to be on the euro. So that happened in the last session. And similarly, we also had the third quarter GDP data out for Italy. Now, Italy's growth, according to their latest GDP figures, is slowing. And why that's significant is that Italy wants to submit a budget deficit of 2.4%. Okay, for the next year. They want to submit that to the EU. The EU hasn't been very happy about that. Italy have also sent in their projections of where they think their GDP is going to be. And you can predict you're going to have a great GDP, but this is the hard data, and the data is saying, you know, your GDP is not so good as you have been expecting. So when you start looking at this, using your handout, what you can start to see is that the market is in a sort of indecisive moment. Okay, it's in an indecisive moment, and if this is where you need to try to summarize. If you notice on my sheet in the handout, I said identify key market sentiment. So when you read analyst reports, this is one of my roles, is I write these reports and I report on these events. And when you're reading these kind of analysts, what you're trying to say, what is the most important information that's coming out right now, especially when we're intraday trading. If we're making trading decisions just for today, then we're looking at the last two sessions. And here we can see that you know, the market is undecided whether it's risk off or risk on, okay? Because we can see now, if we just look at the equity markets now, we can see that the FTSE has now gone into negative territory. It's 0.42%. We can see that the S&P 500 futures, which is this data point here, is just gone flat on the day. It's just beginning to turn into negative territory. We can see that the DAX, that's the German equity index, is down 0.66%. So the market is really just trying to decide whether to be risk off or risk on. And part of the reason for the weakening in the euro equity indices was this very poor data out of Italy. It's going to weigh on the ECB. So the market is now looking to the US. As the US opens, the market's going to say which direction is the US going to be taking the market. So you can see that sometimes when you're looking at sentiment, you haven't always got a clear answer. Okay, so we're in a state of flux. The market's trying to decide whether it wants to be risk off or risk on. And remember, in a risk on market, then you have the commodity currencies which are bought. So that's the Australian dollar, New Zealand dollar, Canadian dollar. They're sort of the commodity currencies. In a risk off market, you have the currencies like Japanese yen, the Swiss franc, and until recently, the US dollar. They're the three currencies that investors put their money in when it's in a risk off environment. So here we are, we're at a borderline of a risk on, risk off environment, and then we can see that there is definitely pressure on the euro. Okay, so we've got some pressure coming up on the euro as a result of Italy's GDP and a result of the whole Eurozone's GDP. Okay, so if we had to summarize this in a sentence or two, we would say something like the market is deciding whether it's in a risk on or risk off environment, while the euro is under pressure as a result of soft GDP data for the whole zone and for Italy, which raises concerns about the Italian budget's submission to the EU. So there we go. We're thinking, looking at the handout, we're looking back. And as we've looked back, we can see that that is the sentiment of the market at the moment. Now, this is very important because when you come to trading, you don't just flick open the charts and see, oh, this is at a key technical level, or that's at a key technical. I'll just put a sell or a buy in here. No, because technical analysis works best when it's in line with fundamental analysis. And the key thing for us to embrace here is what is the current sentiment. So we've already seen that there's an undecided risk on or risk off sentiment. But we've also seen there is definitely a bearish euro sentiment. So here, if we had to think, what currency would I like to be looking to trade? It's going to be something involving the euro. Okay, so we have part one of the puzzle. And I'm going to go through the online trading workshop template. And as we go through the template, we're going to work up a picture. And we're going to see how to exactly trade. So that's it. We've looked back. So for now, we've done section one. Okay, we understand the recent sentiment. We understand a summary of that sentiment. But now we've looked back, it's also important that we look forward. Now, the reason we look forward now is because before you start making decisions about what you want to trade, you need to make sure that you're not about to trade something which is just about to have a really key market move. Okay, so for example, if you were looking at trading the euro and you were looking at it to trade it first thing this morning, just before the GDP data was going to be released, and you were trading it on some previous sentiment, it's literally a lottery. You're just flipping a coin which way the data is released. Now, it's a different thing if you've got a suspicion where the data's going. It's a different scenario if you've been looking at the readings and you're anticipating a weak reading. That's a different matter. But in terms of what we're doing now, we want to look ahead to see what's coming. So let's go to the calendar and let's see what key upcoming market events are coming up. So here we are on Tuesday. This is just to remind ourselves here what we've had. This was the GDP third quarter that we saw, 0.2%, a disappointment, and this is the year-on-year data. So that's what's already happened. And the reason I wanted to point this out to you is that on HYCM's website, if you're looking for sentiment, there is a location here as a starter for you. You can have the daily market review, which will give you some indication of the recent sentiment in the market. There's many different resources where you can get good sentiment analysis, and that's a key part of your trading routine, is to find that sentiment analysis that you can access on a session by session basis. And this is something I wanted to key up for you here, the daily market review, and we've got some recent news there. Now, looking for the calendar ahead. So we're looking ahead. We're looking Tuesday, October the 30th. So there isn't a lot of top tier data. Okay, so that's pretty good for us. We have had some, some good data out of Germany for their inflation, so that is more supportive of the euro. Okay, so that's worth bearing in mind. Germany is the largest country in the eurozone, so we can see that that's been released as we've been on the webinar and as we've been doing it. We have a very interesting speech that's coming up by Governor Polotz. So Governor Polotz is the Canadians' governor. Okay, so the key thing to remember about Polotz is that he can surprise the market. I've mentioned it before in the weekly review. So yeah, so I'm just analyzing this CPI data that's coming in. That's yeah, okay. That is going to be giving the euro a boost. So we're going to have to factor that in. We'll have a look at the charts in a minute, and we'll go through how we analyze conflicting data that's coming up. So that's going to be one interesting to look at. And the Polotz speech is the Bank of Canada's. Now, the situation with Polotz is he's been saying that the Canadian economy is in a good place and looking at maybe putting in more rate hikes coming into the future. So we want to see what he says later on in the session, whether he's supportive for the Canadian dollar. If he says something very bullish, then that is going to have a big impact for the Canadian dollar. Yeah, okay. So let's go and have a look at the charts now. We've looked forward. Aside from that, there isn't really much coming up in the US session. So we'll move on now to the charts. So the obvious chart we want to look at is the euro. So here we can see that data has come in quite good. Okay, so looking at the euro US dollar chart, we can see that this is the candle where that very good data was released for Germany. Now the question is will that CPI data, is that enough to really kind of boost the euro? It's short term, we've got to move. So we've got a slight bit of conflict here. And what we can look at here is how price is going to be reacting around these key levels. Okay, because the question to ask, this is how you have to balance it. What you have to balance is the overall picture for the Eurozone is that the GDP is weakening. We have the Italian budget deficit problem weighing on the euro. Is this data, is this set to last? Is this a one-off? So my kind of gut instinct on this is that the German CPI data is good, but it's not in and of itself to massively reverse the trend for the euro. So the kind of places, this is where your technicals come into play now. Now, if we look on the daily chart, okay, we can see that the euro US dollar chart is not a bad chart to be selling. We look down here, we can see that price has just fallen into a key daily support level. Okay, so can you all see that? That's a key daily support level. There's a swing low there, and price is dipping into that support level, and you can see price was rejected off that support level here. Price is just above that now, and it's kind of hovering. There is opportunity and potential of a bid down at that level because of it's a very good technical place to go long, but there's also plenty of move to the downside on an intraday basis. With the data just out, we can see on the 4-hour chart, we start drawing some trend lines in, and we can see that when you just move, you can see here that for price to be really going further forward here, what we need to see is we need to see this price break out of that trend line, retest, and then head higher. Overhead, we have resistance of the 50 exponential moving average, the 100 and the 200 moving average. So that's on the 4-hour chart. Now let's go down to the 1-hour chart. Here on the 1-hour chart, what we see ahead. Now, can you see all the places where the moving averages have provided resistance? 200 moving average there is the red line. We've had an attempt and a false break of that 200 moving average back down again. We had another test at the 100 moving average. We had another test here at the 100 moving average, and here at the 100 moving average. We've had a drop down into these recent lows, and now price is kind of somewhere around here. So when we're looking now at the charts, what we want to be looking at is we have a broad we have a broad kind of direction of selling the euro. Okay, we've had the German data that's come in, which is a little bit more positive for the euro, but we think that the overall trend is still down. Now, if you look at this trend line that we've put down there, okay, that trend line intersects with the 100 moving average region. Okay, so if I was looking at this session and looking to sell the euro, again, this is not advice, this is education. This is a very sensible place to put your orders. Okay, it's likely that there will be some selling pressure there. So we flagged that up. Let's remember that area, and let's go down to the next charts to see if we have any other opportunities. Okay, so now we see there's a slight rejection of the 50 moving average. Okay, not necessarily wanting to go into a trade here, but we're just noticing that rejection of the 50 moving average. We're also noticing that the same region of the 100 moving average is also the similar area to the 200 moving average on the 30-minute chart. Okay, so that's like a key place to enter shorts. And looking at the 15-minute chart, we're seeing that price is moving up against the 100 moving average. So what we'll do, we'll come back to this chart later on in the session, and we'll see how things are developing. But as I'm looking at that, you're thinking that the place to really focus on and pay attention to is this area here. Okay, that's the standout for me. We've had some good German CPI data that's come out, but the Eurozone data as a whole is still bearish. The US dollar is pretty strong, so I'm anticipating that US dollar strength and Euro weakness pattern to carry on. There's nothing in my mind that really massively alters that scenario. The place to enter would be here, the 100 moving average. Now, there would be a couple of options that you could do. So one option would be to set an alert for at one point, you can see it's at 1.14 level. Okay, so that's another point of confluence. You have a 1.1400 level. Those big zero numbers tend to have quite a strong impact in the financial markets. They kind of act almost as support and resistance levels in themselves. So this is a very good area here. The other thing to look at will be to look at pivot points. Where's the nearest pivot point as well? That's how you start to build the technical picture. So as we're looking at that, we can see, okay, we've got a downtrend. We've got a downtrend. You're looking on the 4-hour chart. You can see that's a very clear place that price is contained. We go to the 1-hour chart. We see we have the 100 moving average and we have the 1.1400 level, all converging in the same kind of place. So the other option is to enter a sell order here. Let me show you how you do that. You would just go to your chart and you put your pending order in, and you would be sell limit. So a sell limit order means that when you're selling above the current price. Okay, so your sell limit, and if we put the order just below that key level, 1.1396, and now very important, we must always put a stop in, and say we wanted to go just, let's say we wanted to go 10 points above that that handle, 1.1410, and we'll just pop that in 1.13490. Okay, what's going on there? So 1.3, 1.1396, 1.14, 1.3490. Let me just see. What have I done? 1.1396, 1.14. Let's see if I just put enter in there. See. Right. Okay. So we'll just pop that there. We'll give the stop a little bit wider. Okay. So looking at this area here, we want to enter in just before the line. We want to so the 100 moving average is at there 1.1396, and we want to enter in at 1.1386 roughly. Okay, so 1.13. Let's do 1.1387, and then we want to have a 10 pip stop above here, so that's 1.1405. Okay, 1.1405. Okay, that looks a buffer right there. Okay, so that would be the other option. Is you've identified the sentiment, you're pretty sure that the euro is still going to be sold off. You've identified a key location. Now, the way to choose a stop. Now, there's many different technical ways to trade. Okay, you can trade so many different ways technically. In a sense, it's not really that important. I trade a certain way technically, and that's just the way that I prefer and that I've learned and I've kind of stuck with. So when you're trading yourself, you don't have to trade the way that I do. You don't have to trade the same technical way that I do. You just have to use the same principles of identifying the market sentiment, finding key places to enter. You may have an entirely different technical system. I like using trend lines and moving averages. I find it quite simple, and you can see technically that the moving averages, they provide obvious logical places to enter. So that's what I'm looking at there. So there's a good obvious good place to enter. If I get stopped out, then what I'm looking at then is how price responds to that 200 moving average. Obviously, if price shoots through and just breaks through these levels, I'm going to look at the feeds and see, maybe I've got my analysis wrong. Was there a factor that I hadn't factored in? But that's one key thing for you to do. That gives you an example of how to enter a sell limit order. And you can see the risk is actually quite nice and tight. And in terms of your take profit, what you'd be looking for 2 or 3 times your risk. And in effect, you'd be looking to take profit back down here, which is just around twice what you'd risked. You want to be taking your profit at key daily levels. You see, you wouldn't want to be trying to hold to break through this level, okay? Because there's almost always going to be a bounce at these levels because they're so technically significant. So you don't want to be, trying to, I'm going to hold and go through these levels, because even if it does go through the level, it's likely bounce, move back up, either hit your stop, move it to break even, and you will be knocked out of the trade anyway. Obviously, if once price goes up and price moves sort of around halfway to my target, then I would move that stop to break even. And even when the trade has gone, one time, the same amount of risk reward I've made, I start to move my stop in behind. I manage your trade from the rear. Okay, so you manage your trade by bringing your stop in close, tighter, minimizing your risk until I get it to break even, when it's about just moving halfway to my target. So that's approximately just over one element that I've risked. So that's there. But I said the other alternative, and which in some senses may be more sensible, is you just simply put an alert up at that level. So when price goes to that level, you can then see what happens. Because sometimes, you're going to get, like here, you see price moves up to that level and, tries to break through. Okay, you can get price go up to this level, sometimes take the stop out and then move back down. So they're the two options you've got. Obviously, the benefit of putting your order in is that, price doesn't move back out without you. Okay, so that is looking at the charts. Now, the other aspect to look at is to look at your risk. Now, I can't stress this enough to you, because the amount that you risk is going to be probably the most significant aspect of whether you carry on trading successfully or not. If you end up risking too much, especially when you're learning, you will end up losing your account, and then you may not ever generate enough income to be able to trade again. So the most important thing for you to do to maintain longevity in the FX markets, especially when you're learning, is you must manage your risk. And I will show you how professional traders manage their risk. And the key area is by not using leverage. Okay, that might surprise you, but professional traders do not use leverage. Okay, or when they do use it, it's very rarely and in very specific requirements. But if you're learning, what you want to say to yourself is, I shall not use any leverage in my trading. Now, you might be asking, what is leverage? Let me explain what leverage is. Okay, so here is the balance of the account. Okay, it's just around 100,000 euros. Okay, so in order for me to trade without using leverage, the maximum lot size that I could use is one lot size, which is 100,000 units of currency. Okay, so as you can see, I put a sell limit order in here of one lot of 100,000 units of currency, and you can see that my position size has matched my account size approximately. Okay, and that is trading without leverage. So you can see the risk here is really quite minimal, isn't it? My risk is 142 euros. It's just over 0.1, around 0.15% of the entire account. Okay, so quite a low risk. Now, the importance of putting non-leverage is that it makes it much easier to trade when you haven't got huge amounts of money being traded in relation to your account. So imagine that you're trading 3% of your account. You've only got to lose 3 trades, which is a very easy thing to do, and then you've lost almost 10% of your account. Now, specifically when you're learning, that is a very difficult thing to manage psychologically. You could lose 3 trades in a couple of days quite easily. And when you have that experience, then you find it much harder to trade. Also, if you're risking 2, 3, 4% in a trade, and then you're in the trade, you will find the emotions will become so high that it'd be very hard to manage the trade properly. So the most important thing for you to do when you're learning to trade, and especially when you've gone beyond trading a demo account and you're risking your real money in the market, do not leverage your account, because you will not last. There's a high percentage of people that don't maintain a long life in the foreign exchange markets, and making sure you don't use leverage is going to be one of the best aspects of what you can do to make sure it happen. It's also how people trade professionally. And if you wanted to have a career in the financial markets, then you need to make sure that you're not trading with leverage. I trade for a fund, and in my fund I have very specific limitations about what I can and can't trade in relation to leverage. And the maximum leverage I can use is 1 to 2. Okay, so if this was my fund account, I would only have the authority, or else I'm breaking the fund's rules, to trade a maximum of 2 lots on any one currency pair. Okay, I can trade more than one currency pair, but in terms of one trade, if this was my trade here and I was trading it for the fund, I would have a maximum amount of 2 lots that I could trade. Okay, and if I went above that, the fund would obviously contact me and say, why are you doing? Why are you breaking our fund's rules? And it would be a serious issue. So if you have aspirations of trading for a firm or for clients, then trading without leverage is the key way for you to go, because then when you submit your track record to a firm, when they see you haven't been trading with leverage, you've still been making a return, then that's obviously going to be very interesting, and they're going to be very interested in the results that you have. Okay, so that's the thing. Look at your risk. You need to be using leverage correctly, and you need to be trading professionally. And then finally, you want to look at the outcome of your trade. Okay, this is on the handout. Did you follow the correct process? If not, why not? How do you learn from what you've done? Okay, so I'm going to just give you a trade. My last trade that I took. Let me just show you. I'll show you the last trade that I took, and I will show you the process that I use. Now, the last trade that I took was on the gold chart. Okay, now I was just closing my desk, and I could just see that 2 things happened. The equity markets tumbled very quickly overnight. Okay, and I'd taken a successful long on gold early in the week here. I'd taken a long where the equity markets have been falling and people have been buying gold recently. I'll show you where people have been buying gold recently. You can see from here, breaking out of this trend line. There was a clear breakout above the 100 exponential moving average, found some support there, moved up to test the 200 moving average, and then moved down again overnight yesterday. And I was looking at this rejection of the 200 moving average, and I was looking at the falling equity markets at the same time, and I thought, oh, this is heading off for another risk off environment. Gold has been bid recently on the risk off environment with the falling equity, so I had my sentiment reasons, and I had some good technical reasons as well. I entered around sort of 100 points above the exponential moving average around there. I put my stop just below the low there, and I was targeting the highs up here. Now, that was good when I went to bed, but while I was abed sleeping, President Trump got a tweeting. And as he was tweeting, he was suddenly reversing the previous announcement. So, of course, all of a sudden, what was a good risk-off environment suddenly became a pretty good risk-on environment. You can see this morning that price, firmly rejected that 200 moving average. And as we discussed, that we've been in that ambivalence. We're risk-off, we're risk-on, we're risk-off again. Where are we now? We're trying to decide. So I got basically caught up in the crossfire of that changing sentiment. So when I analyzed myself, I think, did I follow the correct process? And the answer is yes, I did. I had a sentiment reason for entering my trade. Did I enter it in a sensible place? And the answer is yes, I did. I entered at the break above the 200 moving average, in line with a falling equity market as the S&P 500 was falling. It all made technical sense. Now, the outcome, I didn't like the outcome. Obviously, I wanted a winning trade. I didn't want a losing trade. But in terms of my overall trading, I followed the correct process, and I've technically organized my trade correctly. And I've just basically been, a victim, as it were, of Trump's tweeting. So that's absolutely fine. Okay, I've got no problem with that. So when I look at that, that is trading. You can't win all of your trades. It's just not possible to win all of your trades. Okay. But when I review the process, I'm thinking, yes, that's all absolutely fine. Now, the sort of things that you'd be looking at when you're reviewing the process is what if you didn't follow your process? If I'd said, oh, price just rejected the 200 moving average and I just jumped in, that would not be a sensible way to trade at all. I'm just trading blind. I'm not seeing what's happening in the market. And even if that had turned out to be a winning trade, then I would have said that that was a poor process, and I would have to review with myself why I'm not following the process. You need to do the same with yourself. Every trade is a learning opportunity, so don't allow your trades to go back. Okay, I mean, when I look back at the other trade I took on gold, which is earlier it was around earlier this week, last week it was just when price here had the same scenario. The American equity markets were falling. Price tested this 100 moving average. I saw the resistance there, and I thought, yeah, that trades on. I entered around there. I put my stop just below, and then I woke up on the 25th of October, and my price was hovering around here. And then I had the temptation, which is, do I try to go for the 200 moving average higher above? Okay, or I'm at this key resistance level. Do I take profit? Now I took my profit, and as I look at that, I was reviewing this just the other night. I thought, well, that was a very sensible thing to do, and this is a sensible thing for you. Is when you have your profits, that was just about around 2.5 times what I risked. Take the profit. Don't let it slip. You'll be tempted just to let things run and run and run. The markets don't. Look, you can see up, down, wave, 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 wave. The market moves in that waves as traders take profit. They close positions, open new positions. So when you have your profit at key resistance levels, take it. So make sure you're reviewing and looking at the outcome of your trades. Okay, so now we'll now go to a quick learning point, which is the times to trade the foreign exchange markets. Okay, when you trade the foreign exchange market is very, very important, because there are better and worse times to trade the foreign exchange markets. And the FX markets, they're open 24 hours a day for 5 days a week, and they close over the weekend. Okay. So they're different to the stock markets, which have opening and closing times during the week. The foreign exchange market can be traded anytime, day or night, during the week. However, this is the important thing to grasp when you're learning, is just because they can be traded, it doesn't mean they should be traded. Okay, this is especially true if you're looking at trading shorter intraday moves. So what we looked at here today, we were looking at intraday trading. Okay, so this is short-term trades. You're just in it for a few hours, maybe one session, maybe two. But if you're trading in that way, you need to be very aware of the times. Okay, so each foreign exchange trading day is divided into 3 different sessions. You have the Asian, London, and New York session. And if you look in the chart below, you'll see the times of these sessions. Okay, so this is GMT and Eastern Standard Time. Okay, so if we go from the Tokyo session, so the Asian session really kicks in, and includes Australia as well. It kicks in around midnight GMT through to around 8 GMT in the morning. That for me is my overnight session. When I wake up 6, 7 GMT in London, I'm coming to my desk just after the Asian session, and I'm reading what's happened in the Asian session. The London session runs from 8 a.m. GMT to 5 p.m. GMT. Okay, Now, you'll see here that the New York session starts halfway through the London session. So we started our webinar, our workshop here today at probably, arguably, the best time to trade the foreign exchange market, in the sense that you have the most market participants and the most market volume. The more volume of traders and deals being made, the more opportunities there are for getting better fills on your order. Orders are, there's likely to be greater moves. Obviously, this is not trading advice. I'm not saying that this is the only time you can trade, but what I'm trying to say, I'm trying to give you an education. And this is when the majority of professional traders are wanting to trade, during this London, New York session, particularly during this London in the morning and then the overlap. This is the busiest time in the FX market. So if you're trading intraday, you really would, certainly be wanting to consider these hours as excellent hours. The Asian session, again, can be traded, but it has a different characteristic to the London and the New York session. This second half of the US session is quieter than the first half of the New York session. So that's something for you to bear in mind, that all the times are not equal in the FX markets. I hope you can understand that, and I hope that does make sense to you. Okay. Another characteristic of the markets is, if you're trading intraday, say you came to your desk and you found a trade at the start of the London Open, and you're just approaching lunchtime, okay, just before the US traders come in. Now, a lot of London traders, they'll take their profit from their intraday trades just before lunch, because you think, okay, I've worked hard, my trade's in profit, I want to take my profit, I don't want to let my profit go, specifically if you're trading intraday moves. So often there'll be a retrace just as London traders take the profit from their trade and close their positions, and then the market sort of starts again, as it were, at the same time when the New York traders are just sort of finishing their breakfast and London traders are finishing their lunch. They're coming onto the desk together, and you have this kind of very hot, busy time that's happening. Another phenomenon just to draw your attention to is something called the London fix. This is 4 o'clock GMT time every day. There's a kind of, it's the time when banks process lots of currency orders that is just part of normal market practice. So it's businesses converting currencies for their salaries. It's exporters converting their money. It's just a kind of everyone who needs to deal with currencies but aren't speculating like FX traders. That all happens around 4 o'clock at London, and so that can have an impact on the market, particularly if you notice this on Friday at 4 o'clock. You can often see moves that are happening in the currency markets that may be contrary to the sentiment that's been going on. It's just market participants making market orders. Then that's just an introduction. Don't ignore this, especially if you're trading intraday. Try to understand this. You can come back and look at this webinar. What you'll see over time is that these different market sessions have distinct characteristics, and there's distinct times where things like, as I said, about the London fix, London lunchtime, you got the overnight Asian session, you got the end of New York close. Sometimes you get some very large moves just as New York close ends, and you see spreads widen. And particularly like at the start of the week as well, when the foreign exchange markets open, that's a very dangerous time to trade, because often spreads are very wide and there's not many orders in the market, so it means it can be quite difficult to get your orders filled. So the price moves quite quite a volatile way. So obviously the busier the market is, the better rate you tend to get with your spreads, which is the cost, the difference between your bid and ask price when you're making a trade. So let's have a look here. So let's see. Yeah. Okay, let's go back to this here. Go to one-click order. That's the bid and the ask price there. So you see that difference between 72.8, 735. So that's 0.7 of a point is the cost of doing business. We see here on the here you can see price just rejecting the 50 moving average. As I said, it's the 100 moving average that I think I'm more interested in. I'd feel like I'm chasing price a little bit there. That looks to be the place. But anyway, you can look at that, guys, and see what happens later on. Okay, you can just follow that yourselves. That's the so guys, that is the end of our workshop. This is going to be happening every Tuesday. There's going to be live market intraday analysis, just like you've seen today. This is going to be a practice for your online trading skills. You've got your handout, okay? So what you want to do now is take that handout. You've seen what I've done, and go and practice it for yourself, okay? Just go and practice it. You've obviously got a demo account. That's the ideal place to practice a new skill. Go away, practice, answer the questions, write out, summarize a sentence of what's happening in a sentence or two. Okay. Well, guys, thank you very much for coming to the workshop today. And I really look forward to seeing you next Monday. Also, we have the look ahead. This works very well in conjunction with the online trading workshop. This will be a very good supplement. And if you have any questions, don't forget the address to send the questions to. Send the questions of anything that you would like to see in these workshops. Just email workshop@hycm.com. I want to be as helpful as I can be for you guys to give you the best provision that you can get, really, in understanding the market, how to get trading, how to get yourselves successful on the line. So, the kind of topics that are really important, it's fundamental analysis, sentiment analysis, technical analysis, and then trading psychology, which is something that many beginning traders will ignore, but it's really important. How to handle the psychology of dealing with losing trades, how to handle the psychology of dealing with winning trades, what to do when you've made a mistake, what to do when you just feel your trading just can't go right. How do you handle that? There's a lot of tips and techniques that I have to help people who are stuck in that kind of rut. Okay, guys, thank you very much for today. I hope you have a really good week, and I look forward to seeing you again next week. Thank you. Goodbye.